But for the past 20 years, out of those 20 years, 16 of them, gold has had a positive return.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, I just got off a call with Frank Holmes, CEO of US Global Investors, a gentleman who I deeply respect and have had a fairly close relationship with for the last 7-8 years. Frank is a fund manager based in Dallas, Fort Worth. Not just any fund manager, he's consistently ranked by Morningstar as the top rated gold fund manager in the world. And so we talked about the gold market, obviously. You know, whenever I sit down with Frank Holmes, if I sit down with him for 60 minutes, I have to spend an additional 60 minutes following that conversation just researching in order to get caught up on what we just talked about. And today was no different. We covered a lot of ground. We talked for about an hour. I'm excited to share this with you. But the reason that I wanted to connect with Frank right now was because the gold market's on fire and the crypto market's on fire. And Frank was one of the first gold bugs, at least on my radar, that had a thorough understanding of the crypto market. And so I wanted to get his thoughts on that blended investment strategy, because often when I post content on this channel talking to a gold bug about investing in the gold space, I get a lot of hate in the comments from crypto investors talking about why gold is an investment of the past and carries no value anymore. And I disagree with that. But similarly, if I talk to a crypto investor like Simon Dixon about crypto investing strategies, I get a lot of hate in the comments from gold bugs who have the belief that crypto has no value and will go to zero. And I don't believe that either. I invest in both and for very different reasons. And so I wanted Frank to elaborate on that a little bit, because my background as a value investor is far more thorough in the precious metal space. I have a far more sophisticated approach to investing in gold, silver, and precious metals, from physical through to the exploration companies, which is really where I spend most of my time at the very early stage stuff. But my Bitcoin strategy is very unsophisticated, right? I don't look at the price. I don't put a ton of thought into it. Essentially, I automatically purchase a little bit of Bitcoin and Ethereum every 2 weeks, and I never think about it. I don't look at the price. This strategy might be unsophisticated, but it actually serves me quite well, because I have a growing portfolio that I don't lose sleep over. And, I want to have a horse in that race. I don't spend enough time researching the sector to have an aggressive approach. And this allows me to have a passive position. And I really, really enjoy that. But I wanted to get his thoughts on what the next step would be if I wanted to become a bit more aggressive in that sector, what he recommends. And he had a couple ideas for me. So Frank is a wealth of knowledge, and I really encourage you to watch this video to the end. He's the author of the Frank Talk newsletter, published every Friday to subscribers in over 50 countries. And we had a blast. So if you enjoy this conversation and you want to hear more from me, every Tuesday I publish a newsletter where I talk about all the conversations that I have like this, and separately, right, through my conference business, through the YouTube channel. We have an audience of about 140,000 investors that tune in to various stations that we produce content, and a network that I think is really second to none in the investment space. And what I get to do, which is so phenomenal, is I just get to have amazing conversations with people I trust and get to learn from, and then share those conversations here or in my newsletter. So if you want to hear from me more often about what other things we're up to and learning, investment strategies, positions I'm taking in companies, all this stuff, hit the comment. There's a pinned comment right beneath this video. You can subscribe there, join the 40,000 investors on the newsletter, and I hope you enjoy it. I write it personally, and I really, really enjoy it. So that's it. That's all I got. If there's anybody else you want to hear from on this channel, leave their name in the comment section, and we'll hunt them down and get them on here. Enjoy. I'm super excited to talk to you, and we haven't had you on the show yet, so this is going to be really exciting for our viewers. And you published a video about 2 weeks ago, maybe a week ago, talking about the Golden Cross. And so for any of my subscribers, Frank, you don't know what a Golden Cross is and don't know why it's significant. Can you shed some light on that for them?
So the Golden Cross is a very important technical tool for long-term trends. And what it means is that the 50-day average price of a stock or an asset commodity is gone up above the 200-day average price. And that means it's a bullish secular trend. And when it goes below, that's bearish. And what's interesting to me is that when I last really spoke about it, Jay, was, if you go back to in January of 2019, at your conference, I said the golden cross is just taking place now.
Mm.
And this is a bull cycle, but it's going to be different. And then again this year, I talked about the golden cross is taking place and it's strong. And what's important for investors is we're due for a sell-off. We can have a sell-off. Gold is up 2 standard deviations over 60 trading days. Historically, that says we could get a sell-off. That would be a buying opportunity as long as that 50-day stays above the 200-day. And in March, it fell down below the 50-day gold did, but it never went below the 50-day, never went even close to the 200-day, and it surged right back.
Right. So that was about 18 months ago that cross occurred in the gold price, right? Now, does this apply to other metals, Frank? Do you apply the same, like the silver cross, copper cross? Do these things exist?
Yes, I do. And the big reason why is that so many institutions say, well, we never really follow technical, but actually they do. And you can see when that golden cross took place in January, end of January, February of 2019, then all of a sudden you started seeing hedge fund billionaires go on and say, well, I own gold now, and this is the reason for it. They became more vocal. Ray Dalio has always been consistently vocal about it, but we had Druckenmiller. And then we had Sam Zell, the famous real estate billionaire, that he said, and this time last year, that he was going long gold without aware of the coronavirus. So I think that it's just mathematically better to be long gold. And in my forecast, you know, I said, if we look at what the Federal Reserve's balance sheet was after 2008-9, it grew to $3 trillion. It's now going to grow to 10. So if you looked at that as a tool, one would say that gold could go to 4,000 in the next 3 years. But that doesn't mean, Jay, we're not going to get incredible 10% corrections.
Right. Okay. Yeah, that's what I wanted to touch on because I've heard you make that call at 4,000. And Frank, this gold market, from my perspective, got super hot, super fast. And the way I gauge that is the amount of incoming inquiries I get from people outside of our industry that haven't asked me about gold ever. And suddenly they are daily, right? And so is that a red flag to you? Like, are you seeing the same from your perspective? Is hype suddenly really peaking here?
Yeah, we saw it was particularly with silver, that the silver ratio. And there was an article this week that showed up, was quoted in the Globe and Mail, and a lot of it had to do with the ratio had got it so out of whack with the COVID that it went to like 110 to gold. And I always remind that in the crisis of 1980, when gold hit 850, silver hit 50, that ratio was 17. So it's very foolish to forecast that silver should be $200 do 17 times, but the long-term median is between 40 and 50. So I think that it's easy to say that in the next 3 years, gold could go to 4,000. And if there's a hysteria and fear in the debt markets, then we could see it trading at 100, silver at 100. But it's not a straight line.
No. So do you put a lot of weight on the ratio, Frank? Like, is it a leading indicator that you put a lot of emphasis on, or is it kind of in the periphery and you sort of pay attention?
I think it's helpful when you go back 50 years and look at the ratio and say, okay, where's the mean? And then how many times does it go above or below the mean, and what drives that?
Okay.
But we've basically been, more bullish on gold as an asset class than silver. And I think what's interesting, it really shocks me when I talk to mainstream Wall Street journals, these publications are still anti-gold. Now gold's gone up too far. A year ago, no way, gold's a bad asset class. But for the past 20 years, out of those 20 years, 16 of them, gold has had a positive return. And since the year 2000, gold is almost 3 times greater than the S&P 500, and it's outperformed Berkshire Hathaway, who likes to say, Warren Buffett likes to say, well, gold doesn't pay a dividend. Well, neither does he. And if we take a look at my favorite Franco-Nevada gold stock over the past decade, that's more than doubled against the performance of Berkshire Hathaway. So owning gold stocks and owning gold royalties and owning bullion, I just think it's just a prudent way, the way Ray Dalio, who I have tremendous respect, always says that the 10% golden rule is just prudent, and sometimes you can go up to 20%. It depends upon the imbalance between monetary and fiscal policies. And right now, they're very imbalanced.
Right. Okay. Now you mentioned you're more bullish gold than silver. Is that still the case if you're looking at a strict gains perspective?
Well, what we have to remember, Jay, is that the DNA of volatility of silver is 50% more than gold. What that means is that if gold goes up 10%, then silver can go up 15%, and vice versa. Gold falls 10%, silver is going to fall 15%. Silver stocks are more volatile than the gold stocks. But when you're in that secular bull market and you all of a sudden see a run in silver, then it's just a normal catch-up process.
Right. Right. Okay. So, in the last 3 months, there's been something like 5 million new traders enter the market, like on the back of these discount trading apps like Robinhood and Stash and all this stuff. And, for better or for worse, there's a lot of misnomers, I think, calling this the dumb money and all this stuff. And I don't necessarily agree with that. It's definitely the new money and the inexperienced money, but, it's 5 million new investors who are suddenly paying attention to the markets and hopefully taking control of their financial future. But if they put their eyes on the gold market, it could really move the price. I mean, they're micro traders, but there's millions of them, right? And have you seen this start?
Well, so often when I've spoken at your conference, I talk about the ecosystem. Remember, I've been saying this for many years, that the ecosystem was broken with so many regulations for junior mining and forming capital. And so getting the retail component, going back 3 years ago, I said that a lot of the crypto kids would rather go trade a new ICO and take the profits from Bitcoin than they would to go trade a stock market or junior mining. So that bear market went through, and you have all these millennials stuck at home. And I've written about this, and I've also been a huge beneficiary of it, which shocked me. Like, it's a real wonderful pattern interrupt. My JETS ETF, the only one out there, halved at the end of February going into March. And Eric Buchanan from Bloomberg said, there's 3 ETFs out there. There is Nigeria, and there's coal, and there's JETS, and they're all the cheapest in the world. I don't understand the other two. Why? But I understand is JETS a good deal. Well, you won't believe what happened. That ran all weekend, and we started seeing more and more inquiries. And in Robinhood, we started seeing a growth. And as the airlines went sideways during that whole trough of March and April, we saw something like 25,000 retail investors through Robinhood, which you can get the data on, come in and invest between $2,000 to $10,000. And we had a 70-day run of $1 billion went into our JETS ETF. And then Buffett comes out and says he's out of the airlines, he's got nothing but raising cash, and they jumped 57%. Well, I asked a lot of these millennials, where do you get the information? It's YouTube and podcasts. Yep. And they've done research that after SARS, the airlines jumped 120% over 6 months. So they're speculators. And then after the tech bubble in 1999, and then we had 2001. After 2001, 6 months later, they're up 80%. And after 2009 bottom, 6 months later, the JETS were up 80%. So you have this smart, rational speculation come in, and most of them made money. And then I have to read this stuff from some newsletter writers. They're bad, etc. Are you crazy? The ecosystem needs speculation. It needs minnows. And some people make mistakes. Well, always doesn't matter hedge funds or not, but they focus on all the negative. A lot of these young people came in. They're bored at home. They knew everything about the airlines industry, which really impressed me, because they're always looking for the cheapest deals to take away. They want an experience. Their experience came from traveling. And all of a sudden they couldn't travel. It showed up in the capital markets. So good for us, Shay. So important.
Completely agree. I love that. Okay, I want to chase that thought for a second. So, because we've been getting a lot of comments to the videos, a lot of incoming emails asking it. They're new traders to the market that entered in this trend, started day trading, but day trading is really hard, right? And it's very stressful and it's hard to win. And so the questions we're getting are, how do we start value investing? What is value investing, right? And so let's start, Frank, just by talking about the gold market, because it's hot right now. A lot of people are turning their heads this way. If you're a new gold investor, and so you can look at physical, you can look at ETFs, look at funds, miners, down to expiration. What do you have to say to somebody who's just starting to sniff around this industry?
I would say that most of the narrative from gold sell side broker analysts is really flawed. I would say that 90% get these varying factors, but at least a minimum 70% of all day trading is really quant funds. And Citadel actually manages a lot of the flows because they create a market for bids and offers around the world. And so you have a very strong mathematical approach. They don't look at NAVs that everyone wants to try to say, my stock is cheap versus that stock. Doesn't mean anything. They're looking for momentum factors. They're looking for reserves per share growth. They're looking for cash flow per share growth. They're looking for revenue growth. And if you do two companies merge and the net per share is down, yeah, the gross revenue of two companies is higher, but the per share basis is down, the stock is sold. Well, you don't get that from gold analysts. They're telling you, oh no, it's a great company. It's not happening. They immediately fall. Bad news, they immediately fall. Well, who's doing this? It's the quants using sentiment analysis, using financial analysis of the income statement. And so the world has changed. And so I think for these new investors coming in, if you're going to buy a gold stock, etc., you want to have the cheapest on cash flow multiples. More important, not future, but the momentum of today. And then I have found, and I've done this studies over and over, that if I took the 100 gold producers I find, and I look at the top 10 growth in revenue per share versus the bottom, the worst 10, out of the 100, so 80 are in middle territory, the spread between their performance over 1 year and 3 years and 5 years is unbelievably wide. Mm-hmm. So what does that tell you? It's simple. Who has the best revenue per share growth? And if the last quarter is above 4 quarters, that's a better predictor of momentum with gold prices rising. And same thing, if you have that revenue and you have the cash flow growing last quarter over 4 quarter average, those stocks outperform. And I think now where I've done the work on the junior mining stocks, you give me any junior mining company that has the most reserves per share, a basket of them, and plus they always have $300,000 to pay the lights and the regulatory compliance and audit costs, etc. If you add that basket of stocks, they'll perform. They'll perform the junior space because money's going to go to those companies that have the most reserves per share. And as you go along the cycle, because Jay, I'm telling you this is important, in a secular bull market, we're going to get big corrections, but the juniors that have the most reserves per share are the best at finding reserves per share. They're the ones that get taken over. They're the ones that attract eyeballs.
Okay, that's excellent. Thank you. Thank you for that, Frank. So now how much emphasis do you put right now? We're talking about, let's keep it with expiration and maybe a development, sure, on jurisdiction. Are you hyper concerned about jurisdictional risk more so than usual?
Yeah, jurisdiction is really interesting. If you get a basket of names from a country, you get enough stocks that are listed in Canada from Mali versus somewhere in Venezuela or Peru or whatever, you can see that the valuations for an ounce of gold are different. And I think that that's a better way of the wisdom of crowds approach, that what is an ounce of gold really worth. You can't say an ounce of gold production in Quebec or Ontario is the same as Kazakhstan.
Right.
This is not so. And if you have any success in Kazakhstan, the local mafia of whatever it is, that they'll find a way to take that away from you. So it's recognizing that's why it's cheap. So yes, we do look at those jurisdictions, and I think they're very important. And when you see like Robert Friedland's Ivanhoe Mines, which is so rich, has the highest grades in the world and great values per share, people are worried about the Congo. Well, you would be worried about the Congo 20 years ago, Jay. But today it's different. Why? Because the Chinese are there. And the Chinese are his biggest investors, and they paid a big premium to go into Ivanhoe. And they're very much building railways and ports throughout Africa. So those governments are not going to screw around with the Chinese, and they're going to make sure their capital is protected. So I think a value in those countries is now more attractive.
Right. Okay. Now, just watching the clock here, I want to make sure we cover, I have to talk to you about Bitcoin because you're one of the few people who's super versed in both camps. And every time I talk about gold on this channel, all the Bitcoin investors start hating in the comments. Whenever I talk about Bitcoin, the gold investors do the same thing. So let's just start with that. What do you have to say to that one-dimensional investor who is gold but not Bitcoin, or Bitcoin but not gold?
Well, I'll give you a different view. My dear friend, Mike McClone at Bloomberg, he tells me that if he mentions gold and Bitcoin, he gets many more click-throughs, and his story is shared much greater. And I thought it's interesting. If he talks about oil, he gets more click-throughs than the word energy. So he was commenting on word choices, very important in the headline, along with the chart. And they get bonuses at Bloomberg for how often the story is shared and presented. So I think that when we talk about Bitcoin and gold, they're very relevant, but they are like two different audiences. And what happened when we launched Hive blockchain technology as the first crypto mining company, it really captured the imagination that there was an investor my age that wanted to play in digital money and decentralized finance, but they didn't want to go to an exchange. They didn't want to go where these bankruptcies and frauds take place. They're always worried about hacking. So what's happened with a company like Hive, it's basically become a currency itself. And it correlates 92% of the day, every day, with the direction of Ethereum and then Bitcoin. So we are the largest industrial producer of Ethereum, and Ethereum's been very profitable for us. We had some headaches with our senior largest shareholder, and with a bit of a proxy issue, but we solved all that. We got control, we got transparency, which is so important for me, got control of the corporate governance. So we've now turned and dropped our costs dramatically, and we're producing 3% of the world's Ethereum. Ethereum's gone from $110 this year to $348 today. Hive has had the biggest bounce of all the crypto stocks with that. So if people that are in the stock market that do not want it, they're using Hive as a proxy. Some days we traded this week was 20 million in one day, and earlier this year, 30 million. I don't think it's going away. I think Ethereum is going to be more significant as sort of a backbone for the crypto world. Bitcoin is going to become like Andy Warhol art. It's going to become valuable because there's less and less of it. A lot of coins get lost, and you get more people owning it. And they're going to say, I own this 64-digit coin, and it's going to be blown up as a digital number. It'll look like Andy Warhol art. But if you look at some of his prints, like the Mao prints that came out at $1,000, a limited supply of them, they went to $250,000. As Warhol's fame grew and appreciation for his art style, and people loved the picture of Mao, the whole thing's up and it became a piece. I think that's what's going to happen with Bitcoin. But Ethereum, no, it's going to become the backbone for the world.
Interesting. Okay, so let me share. I own some Hive, and I invest regularly in Bitcoin and Ethereum. My strategy is not super sophisticated. So tell me what you think about this. I actually buy Bitcoin the same way I buy gold. And I'm not buying gold right now, physical gold. I'm still buying equities, of course, but I buy a small amount every 2 weeks. I don't look at the price. I don't even think about it, Frank. I'm not up to speed enough to be aggressive. Do you know what I mean? But I definitely want a horse in the race, right? And so that's my current plan. What do you think about that?
I think it's brilliant. You know, we have a plan for U.S. investors only. It's called the ABC plan. And it's very simple. It's $1,000 down and $100 a month. That's less than a Starbucks cup of coffee a day. And you can do it every 2 weeks, $50. And you can buy the gold mutual funds on that methodology. And that investor that's done that, they're so much further ahead when you look at it. We were looking at our All-American fund, and someone started, when we first started this program in the 90s, was $100 down and $1 a day. And out of nowhere, that person called me up a couple of weeks ago and said, you know, I have $25,000 at $1 a day.
Amazing.
Yeah. And so, and they said, and they put it in their RSP in Canada or their IRA in the US. And so you've got an additional write-off. And now the guy has to cash out. I think it's 70 years old, so he has to cash out. And it's a big sum. He said now he really appreciates this little bit all the time.
Yeah, absolutely. It's such a rewarding strategy when you're able to just set it and forget it like that, right? And then look back a year or two down the road. What are your thoughts on central banks creating their own cryptocurrencies, Frank? Is this something you think is already happening or is going to happen? Is it in your mind?
Sure. And I think the battles with this Bank of International Settlements, because they're not in control of everything, and sort of a real negative stay on Bitcoin. But we saw Bitcoin bottom after JP Morgan came out with their stablecoin.
Yeah.
And then we saw the big rally, and then Facebook came up with their coin, and then it ran up, and then it fell back because everyone bought Bitcoin. I'm sorry, bought Facebook. So it's in motion, and how it's going to evolve, we don't know. But the idea of digital money, there's no doubt, and stable, and the coins, and be able to trade securities with these coins, it's going to happen. It's been slowed down by the regulatory regime because, Jay, my experience is lots of banditos. They make Vancouver promoters look like choir boys. I mean, like, you're talking about people that say one thing and they're just so unethical, like every way Sunday. So I think the fact that the regulatory world has come in to clean up and spank a lot of them, that's great. And that ICO market, I think it's just healthy. But where it's going to go, it's just a matter of time. And I think the coronavirus accelerates it because the idea of touching paper money, because they know with the $100 bills, there's always a little few, they say cocaine on something like 90% of the coin of paper money. So what about the coronavirus on paper can last 3 days? So I spray, my cash, I spray it with alcohol. And I get out because in case I have to deal with it when I take it from the bank. You have to think that way. But don't worry about your gold and silver, Jay. The virus doesn't last long on it. It's like landing on bleach.
Right. Now, okay, so tell me anything about this. I'm not sure if I fully understand the question that I'm about to ask, but part of the advantage of Bitcoin and cryptocurrency was the anonymity, right? The ability to transact without disclosing what you were doing, right? There's massive benefit to that. And would a central bank created cryptocurrency not have the opposite effect where you're able to be monitored 24/7, every purchase of gas, credit card transaction, et cetera, et cetera?
Absolutely. That's why they love it, but they don't control it.
Right.
So there's just no doubt about it, that they want to control everything. They want to control tips. If I give someone, a $1 tip, they want a piece of it. The taxman wants a piece of it. So there's no doubt this is going to go on. And if they want to have a lockdown, and the real fear is what happened in Cyprus. When Cyprus basically defaulted, they froze everyone's cash. You couldn't get cash to the bank, an ATM, no cash. And then when they finally let you get cash, they give you $100 a day. And then they did a swipe off against, right off the top, they took over 10% of all your investments, all your cash to recapitalize the banks. So you see that a lot of people in Cyprus all of a sudden moving forward became advocates of gold coins and silver coins and owning some hard assets. And there's the idea of having a Bitcoin for safety that they could turn around and protect themselves. You really see that. And you see that I've been told on these ATM Bitcoin machines that there are certain airports and places where they're much, much greater. And who use them much more is not just the bad guys of hackers, et cetera, but really it's people trying to get their wealth out of Argentina or Eastern Europe countries. It's a way to get away from really almost like mafia governments and how they function. And so I think that's a phenomena. There's a pushback on, how much can governments come in and reach and take your account. But I think a lot of banks changed their policies and their bank account disclosures after what they got away with in Cyprus.
Okay. All right. Now you kind of touched on this a little bit in terms of the coronavirus expediting the digitization of currencies, but is there anything else that you see, Frank, that will forever be changed? Every cataclysmic event changes some things in our lives forever that will never change back. Anything else on your radar that this pandemic will change in the way we go about our lives that we can't?
First is really obvious. Who are the best performing stocks in the S&P 500 this year?
Gold?
Gold stocks. Yeah. What else? Think of the stocks. It's a real simple model. Who showed growth in revenue per share and who showed growth in cash flow per share?
Keeps you at home.
Zoom,
Peloton, Netflix.
300%. AT&T raised their dividend. Why? Because you got to use AT&T to send everything through the pipes. In fact, the real biggest digital bank in the world are telecom companies. If you look at the history of the creation of Bitcoin, the backbone, the intellect, it's a telecom algorithm. It was the idea of porting money So you ain't go to money with your bank, but the bank turns around and says it to one city to the next. They're using telecom, they're using a cable system. So I think that the telecom stocks, no doubt, are going to be a mainstay. And I think companies like I mentioned earlier, Home Depot, whatever, think so. Everyone's renovating their home and fixing up their homes. And I think I'm going with Clorox. Clorox is the luxury goods of bleach, because you can always buy bleach cheaper, but there's the idea of buying something of that quality and standard. So these stocks, they're raising their revenue, they're raising their dividends. That's going to be the paradigm shift. Office space, that's not a jump ball right now. I think that's Zoom in the world is going to change a lot of that. And I think that, but your house, no, your house is going to become your castle. You're going to spend more time in your house. Yeah. You're going to want to have, like you're saying, your garden, and you have all your organic vegetables, right, Jay? Yeah. What were you sharing with me? Were you recently doing in your back house?
We ticked all those boxes. I mean, we were at Home Depot every weekend, and now our backyard is phenomenal. It's like a mini farm, right? We've got every kind of vegetable we typically have on order from Spud or wherever we order from. It's just growing now, and
you know what's special about that? It's almost biblical. It's about growth. You're growing plants. You're growing your business. You go and look at the market, what adapts and adopts to the coronavirus, who's going to, and where the money's going to flow into. And I think that when it comes to my Jets ETF, that's going to be a very big speculative trade, and it's going to have these big swings to it as people start flying again. But you know what came out, which is interesting, like looking at the 50-day moving average on gold, they now print every day the TSA, how many people they clear. And a year ago, there was 2.7 million people cleared a day in the US from international flights and domestic flights. And it fell down into the bottom in April to less than 90,000 a day. And then it soared up to 700,000, and Jets soared up with it. Now it's fallen back to 600,000. Jets have fallen back. So people are now looking at new metrics like the TSA's data every day. They also look at Google trends. And then so Google's a week ahead. So if all of a sudden just the change, the delta of people looking up the price of gold is usually a precursor for gold to be higher next week. If less people start looking up the price of gold, it's usually a precursor. People are bored and gold corrects. It's really remarkable. So now they look at Open Table publishes everywhere how many people are using Open Table for their service, and you can see a trend for restaurants. So how will the world change? You're going to have to look at these Open Table metrics, to look at restaurants. You're going to have to look at TSA, to look at the airlines industry. It's going to give you an idea of how people are money's flowing, etc.
Yeah, okay. And I love that, transitioning your house into the personal castle. Like grab any little bit of sovereignty, even if it's a garden or a home gym. Like I love it. I love it.
And it's growth.
Yeah.
It's all about growing.
Yeah. Okay, very cool. All right, I have to ask Frank for a book recommendation. What is one book that all of our viewers should read this year? Anything come to mind?
Do you want like a historical book, or I think that you go to YouTube,
okay,
and you can get a lot of book summaries, animation, and most of them are under 10 minutes.
Okay.
And so I think Think and Grow Rich is the classic of Napoleon Hill of interviewing great achievers and what they did and how they thought. If you haven't read the book, you can condense yourself with it. And I think and Warren Buffett recommends the book along with a book called Persuasion, how you're motivated to buy, or if you have to sell a product, how you're motivated. All the CEOs have to have read that book. And I think that The Intelligent Investor was written by Benjamin Graham, who was Warren Buffett's mentor and professor from University of Columbia. And I think you can watch, there's 4 different versions, and they're all under 10 minutes, so you can get an idea. Then you go buy the book if you really like the animation.
Yeah, that's actually a really good idea. I think most of the books you mentioned are up on the bookshelf. Had I known there was a 10-minute animation, I could expedite my learning process. I probably would do that. So, okay, awesome.
That's the first thing I do now. If someone recommends a book, I go and see if there's animation, and then I go and buy the book if I like the animation.
Yeah.
And what I love about it, after you've read the book, Jay, you go back and watch that animation 5 years later, and you'll see like a book I read 5 years ago, and it all comes alive. 8 minutes. It's wonderful.
Awesome. All right. Now, in addition to managing U.S. global investors, you produce a lot of content, Frank, for anybody who wants to hear more from you. Should we send them to the website? You're very active on Twitter. Where should they go?
Sure, they go to our YouTube and subscribe to become a subscriber. And the best thing is go to usfunds.com and subscribe to the Investor Alert. We publish every Friday. It's a SWOT analysis, like a game film of the football team or hockey team last week and who we're going to play next week.
Yeah.
It's comprehensive but concise.
This is the Frank Talk newsletter. Everybody should be reading this. It's excellent. Okay. Very cool. Look, Frank, it was awesome connecting with you and catching up. You know, I used to joke with Gretchen, my wife, every time I get off a conversation with you, I have to spend 60 minutes Googling things to catch up on everything you just told me. And today's no different. So
you're very kind. Thank you, Jay.
It's always fun. So hopefully we'll see each other in person soon. I look forward to it.
All right. Happy investing.
Okay, that's it. I hope you enjoyed it. I always love talking to Frank Holmes. Now, if you want to hear from me more often, recapping conversations like this and plenty others that we have on the YouTube channel and elsewhere, I write a weekly newsletter that I publish every Tuesday morning, and it's free. And all you have to do is hit the pinned comment beneath this video to subscribe and join over 40,000 investors who tune in, where I talk about conversations like this. I talk about my investment portfolio, positions I'm taking in companies, industries and trends that I'm looking at or have a close eye on. And I'd love to have you join the team. It's a letter that I authored personally, and I really, really enjoy it. So hit that pinned comment directly beneath this video. Okay, until next time, bye-bye.